Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think it's
Every time the Federal Reserve cuts interest rates, they tell us it's to help the economy, to make borrowing cheaper for us, to protect our jobs. But the reality is, the entire system is designed to make sure we lose. When rates go down, our savings accounts earn nothing while banks pocket the difference. When rates go up, we pay more on our mortgages and credit cards while banks still profit. And the feds have known it for decades. But there's a reason they keep playing this game, and it has nothing to do with helping us. It has everything to do with who actually controls the money. And I'll show you exactly how in today's episode of Classified Report. If you like our work, please give us a subscribe, it really helps. Before we dive in, everything you're about to hear is sourced from CNN Business, Fortune Magazine, NPR, Al Jazeera, official Federal Reserve statements, and Trading Economics. All links are in the description below. I'm encouraging everyone watching this to verify every single claim yourself, because what you're about to hear may sound like a conspiracy theory, but even though we hate to say this, it's actually true. Let's start with what the Federal Reserve wants us to believe. When they cut interest rates, they say it's to stimulate the economy. Lower rates mean cheaper loans for businesses to expand and hire more workers. Lower rates mean cheaper mortgages so we can buy homes. Lower rates mean the economy grows and everyone wins. That's the story. But here's what actually happens when the Fed cuts rates, and this pattern repeats every single time, regardless of who's president or who's running the Fed. While I'm making this video, Fed rate cuts dropped borrowing costs by 1.75 percentage points over several months. Massive cuts, historic cuts, so our mortgage rates should have plummeted, right? The average 30-year fixed mortgage rate sits at 6.19%, down from 6.66% a year earlier. The Fed cuts rates by nearly 2 percentage points, and we save 0.5% on mortgages. 0.5%. Where did the other 1.5 percentage points go? They went to the banks, because here's how the scam works. When the Fed cuts rates, banks immediately slash what they pay us on savings accounts. Most of us are earning 0.01% on our savings right now, while inflation runs above 2.5%. That means we're losing more than 2% of our purchasing power every single year just by keeping money in the bank. But when it comes to lowering the rates banks charge us for mortgages, car loans, and credit cards, suddenly there's no rush. They pass the rate cuts to us slowly, if at all, while immediately cutting what they pay us. This is not an accident. This is not a market inefficiency. This is the business model. Now here's the deeper problem that the Fed will never openly admit to us. They can't actually fix the economy. They have one tool, interest rates, and two completely opposite problems. When unemployment rises, they need to cut rates to stimulate job growth. But when inflation rises, they need to raise rates to cool down prices. And here's the trap. They can never fix both at the same time. Every Fed chairman knows this, but they'll never say it publicly because it would expose the entire con. Look at the pattern. Fed officials themselves can't even agree on what to do. In recent rate decisions, multiple officials dissented from the vote, the most dissents in 6 years. One official wanted no rate cut at all. Another wanted the cut to be bigger, double what was approved. These are the people inside the Fed who see the actual data, and they can't agree on which direction the economy is even going. That's not expertise, that's guessing, and we're trusting them with our entire financial system. But it gets worse. The unemployment rate has climbed to 4.4%, the highest in 4 years. The Fed's own projections show they expect it to stay around 4.5%, yet they're planning one more rate cut in the coming year. One. Meanwhile, inflation is still running above their 2% target, so they need to cut rates to save jobs, but they can't cut too much or inflation gets worse. They need to raise rates to control prices, but they can't raise rates or unemployment explodes. They're trapped, and so are we. Now, let's talk about how the Fed and the government manipulate the data to hide just how bad things really are, because this is where the scam becomes truly criminal. At a recent press conference, the Fed chairman admitted something absolutely devastating. He said that while government data shows the economy has been adding 40,000 jobs per month, that figure could be revised lower by as much as 60,000 jobs. Let's do the math together. If official reports say we're adding 40,000 jobs per month, but those numbers get revised down by 60,000, that means we've actually been losing 20,000 jobs per month for months. That could be 160,000 jobs lost that they only admit might be real after the fact. And the Fed chairman called this a labor market that seems to have significant downside risks. That's Fed speak for the job market is collapsing and we've been lying to you. This is how they operate. They release positive jobs numbers that get reported in the news. We feel okay about the economy. Then 6 months later, they quietly revise those numbers down after it's too late for us to react, after we've already made financial decisions based on false data. And this pattern repeats constantly. Initial jobs reports are almost always revised down. Initial GDP growth is almost always revised down. But the corrections come months later when nobody's paying attention anymore. They call this data-dependent policy. We should call it what it really is: manipulation.
Now, here's where it gets truly brilliant from the Fed's perspective. They've convinced us that the biggest problem is political fighting over interest rates. Presidents always want lower rates to make the economy look good. Fed chairmen always want to look independent and tough on inflation. So we watch this theater play out in the news. Recent tensions show this perfectly. One administration demanding rate cuts be doubled, calling the Fed chairman a stiff who made rates too small, threatening lawsuits over construction cost overruns at Fed buildings that ballooned from $1.9 billion to $2.5 billion, shopping for the Fed chairman's replacement months before the term ends. Meanwhile, the Fed chairman fights back, publicly blaming political policies for inflation. Quote, "It's really tariffs that's causing most of the inflation overshoot," directly accusing political leaders of breaking the economy while the Fed has to clean up the mess. This is perfect for them, because while we're watching this political fight, we're not noticing what's happening to our money. We're not asking why mortgage rates barely moved when the Fed cut rates dramatically. We're not asking why our savings accounts earn nothing while banks report record profits. We're not asking why the jobs data keeps getting revised down months after the initial reports. The political theater is the distraction. It makes us think the problem is whether rates should be 3.5% or 4%. But that's not the problem. The problem is that the entire system is designed to transfer our wealth to the banks, regardless of whether rates go up or down. And both sides, the politicians and the Fed, benefit from us not understanding this. So let's talk about who actually benefits from this system, because once we see it, we can't unsee it. When the Fed announces rate cuts, what happens? Wall Street celebrates. The Dow jumps 497 points, the S&P 500 gains and closes near record highs, stock markets thrive, corporate profits are protected. Meanwhile, our mortgage rates barely budge, our credit card interest rates stay high, our savings accounts earn nothing, and inflation continues eating away at whatever we have left. This is not a coincidence. This is not a market inefficiency. This is the feature, not the bug. The Federal Reserve was literally created by banks for banks. Look up the history. It was designed at a secret meeting of the biggest bankers in 1910 on Jekyll Island. This is historical fact, widely documented. The entire purpose was to create a system where banks could never fail, where they would always have access to cheap money from the government, where their profits would be protected no matter what happened to the economy. And that's exactly what we have today. When times are good, banks make massive profits lending to us at high rates. When times are bad, the Fed cuts rates, bails out the banks, and we get stuck with inflation that destroys our savings. Heads they win, tails we lose, every single time. And the Fed's job isn't to protect us, it's to protect them while making it look like they're trying to help us. So here's what we're actually looking at. The Federal Reserve has one tool that can't solve two opposite problems. They manipulate jobs data and then revise it down months later when we're not paying attention. They cut rates by 1.75 percentage points, but our mortgages barely drop while our savings accounts go to zero. 3 Fed officials can't even agree what to do because the system is fundamentally broken. Wall Street hits record highs while we watch inflation destroy our purchasing power. And the whole time, they distract us with political theater about who should control interest rates, when the real issue is that the entire system is designed to transfer our wealth to the banks. The Federal Reserve doesn't exist to help us. It exists to make sure the banks never lose, no matter what happens to our jobs, our savings, or our economy. They just need us to keep believing that if they could just get the interest rate exactly right, everything would be fine. But after 100 years of this system, maybe it's time we admit the truth. It's working exactly as designed. The banks are protected, Wall Street is thriving, and we're getting crushed. The only question left is how long until enough of us figure out that this isn't a bug, it's the entire point. Drop a comment below. Do you think the Fed is actually trying to help us, or is the whole system designed to protect the banks while keeping us broke? Because once you see how this works, you can't unsee it.